Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really going to be a pretty interesting week for the US share market. We've got the key inflation data, and really that's starting to potentially pose a few worries for the market. There's a little bit of concern that obviously there will be a bit of a pickup here in inflation, as the economies gradually reopen. Certainly those inflation fears have not really been helped by the cyber attack on one of the US pipelines, one of the major gasoline pipelines of the weekend. That sort of caused a shutdown, and there's fears now that potentially there could be some fuel shortages over the next sort of week or so. So if you add that to continued sort of uncertainty and the sort of reopening, the sort of COVID vaccines that again have taken a little bit of a drop off in terms of the number of getting vaccinated every day, that's potentially a little bit of complacency creeping through. Really, you only have to look at India to see what complacency can do. Back in January, they thought they sort of controlled the virus. Cases are really pretty low compared with the population, but now you're running at close on sort of 380 to 400,000 new cases a day. So it will be interesting to see, if inflation, the inflation data does sort of print at a highest number. Just see what the market reaction is, because most analysts and economists expect to see a little bit of a pickup inflation. I say as the economies reopen, there's certainly been pent-up demand out there, but it's just a question of whether it's just going to be sort of a 1-2 month blip, or whether it's going to be continued inflation through a prolonged period. Down on the other side of the coin, we have the jobs data, which was really pretty much on the weak side. There was only around sort of 266,000 people looking for, close on a million again. But also we saw a downward revision to last month's number as well. That was revised down from 916,000 to 770,000. But still, most of the analysts are, sort of saying any dips really are there to be bought in equities. You've still got a pretty favourable environment. You've got authorities and central banks that are really doing everything they can to sort of keep the economy pushing along. You've still got some pretty major sort of stimulatory issues coming through, and that should be good for equities over the medium term. So on the back of that cyber attack in the US, oil has spiked. WTI now above $65 a barrel. Europe's still facing its issues, with sort of minor lockdowns around the sort of countries, but they are getting the vaccine rolled out, and also as well they've just increased their order for the Pfizer vaccine coming through as well. Whereas the UK is relaxing sort of restrictions even further, and sort of all pointing now towards a sort of a full reopening, sort of June, July time. They've also announced as well sort of 12 countries where people travelling back from those countries do not have to self-isolate when re-entering the UK. But it's not all plain sailing for PM Boris Johnson. He's certainly got some issues after the recent elections in Scotland, talking about a potential further referendum for a re-entry back into the EU and sort of leaving the UK. Closer to home, in Australia seems to be managing its sort of minor sort of outbreaks of COVID within the community pretty well. The latest case in Melbourne in the community hasn't caused a lockdown, and also, more importantly as well, hasn't affected the Trans-Tasman bubble for travel between New Zealand and Australia. Also as well, the rollout of vaccines seems to be going pretty smoothly in Australia as well. That's not quite the same in New Zealand, where you've got some issues with the vaccine rollout. You seem to have these centres sort of set up with people booking appointments, but then they're allowing walk-ins as well coming through, and there's been a little bit of sort of confusion and cause of long waits, and some people haven't been getting the vaccine. And the government's really trying to turn that around in sort of full sort of crisis mode, really, because obviously the vaccine is the way forward, and it's obviously one of their big rollouts for this year in terms of policies. That is just the latest of a string of sort of eventually sort of embarrassing situations for the government. There was the debacle with the public sector pay freeze, and it's just sort of all mounting up. So it's going to be interesting to see what's delivered in the budget, because again, potentially there's not going to be much to be given away. Interesting bond in the marketplace from Sky City Entertainment. 6-year minimum rate will be 3%. If you're interested in that, go to the website www.bayfinancialpartners.co.nz. Also, as well, a good time to be checking those KiwiSaver balances to make sure you've made the minimum contributions to get that maximum government contribution. Now, in this low interest rate environment, it is pretty difficult for investors who are looking for income, especially given that interest rates, bonds, and term deposits are pretty low. But there are some alternatives out there, and if you're interested in discussing what is available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.